Yep. Good morning, everybody. Danny Riley from MrTopStep.com and Pitbull Traders. I just want to talk briefly about how the webinar is going to go and a little bit about my background and how I got here. Anyways, I think a lot of you already know that I ran a very large S&P operation on the trading floor. I handle a lot of different types of business, proprietary trading groups, hedge funds, program trading business. I did even a lot of retail. And some people would always ask me, if you did so much business, why did you do retail? Well, retail always traded, for one. But one of the things that I think that made me different from a lot of the desks down in the trading floor was that we actually fought for the customer. When the bid and offer was 70 bid at 80 and the customer bought 90s, we were in there fighting for the customer. We always tried to make it so that it was a fair and level playing field, even though at that same time, there was something called dual trading. In 2009, I started MrTopStep as a way to continue kind of what I was doing on the trading floor, providing content and trade ideas and a lot of the things that I learned from the trading floor. Beyond that, what happened is I hooked up with Pete and John Nigerian to form MrTopStep, and over the years, we built it out and built it out and built it out. We've sustained through almost every major market crisis from 2009 on. The company continues to thrive. And one of the main goals that I tried to accomplish when we started making MrTopStep was to bring a collective of traders together. Now, what I can tell you today, we have the best group of traders that we've ever had. No doubt about it. And over the years, I cannot tell you how many different emails I've got from people saying, hey, could I join? Could you represent me? Well, that has always been a sticky thing. We basically, when I figured out who I wanted to go after, I went to them. I went out and I said, hey, do you want to be part of this? We always wanted to make sure the people that we brought in were of quality, that they actually knew what they were doing. And today we have 4 presenters that do know what they're doing. And the way the webinar is going to start out is I'm going to introduce each trader. And that trader will go on and he will give a little bit of his own background, where he came from, who he is. And then from there, I'm going to go offline. But during the process, during the webinar itself, we're going to give away 10 free prop trading accounts. And that's going to be based off emails that we received to those people that are in the webinar right now. And the way it's going to work is we're going to use AI. We're going to load all those emails in. And when at the end of each presenter, we will give out the name of or the email of who that is. And if you're not in here, I'm sorry, you're not going to get the free prop account. But I want to just finish by saying one thing. And I think David Dube, the first presenter, is going to agree with this. There was a famous trader on the trading floor at the Chicago Board of Trade in the bond pit. His name was Charlie DeFrancisco. And Charlie, he actually had terminal cancer toward the end of his career. And he was going from Northwestern Hospital every day. And he would come into the bond pit wearing a flak jacket. There was a very famous book written about Charlie. And one of the things that Charlie always said, and I know that David's going to go a little beyond this, is that it's up to us, the traders that know how to trade and how to manage risk and to pass it on to the next young trader. But you don't have to be young to share information. So what I'm going to do is I'm going to pop off here. David, it's all yours.
All right, thank you, Danny. I appreciate the opportunity here to present to everybody. I know Saturdays is a busy day, family weekends. So thank you, everybody, for attending today's inaugural webinar of the Pitbull Trader Funding Initiative. And so taking off what Danny was mentioning about, trader development is our primary concern for everybody in this particular space. So many of you are already participating perhaps in various trader funding programs out there. And of course, this segment of the trading world now has become, as we all know, tremendously popular. I've personally been exploring several funding firms myself over the past year or so. Uh, and I found that it's a extremely great way to manage personal risk, right, through that evaluation process, but also developing a certain level of discipline in order to, have an end goal, i.e., passing that evaluation and elevating yourself to the next uh, pro level, right, in order to achieve payouts. But again, in my experience during that exploration, there was one key element that for me that came kind of very clear. Most of these funding firms, they provide access, but very little guidance, right? So what happens is, for those of us that have been trading around the markets for quite some time, this kind of, for me anyways, felt very familiar from years back. Many of you in the early days of the discount brokerage revolution, firms like Muriel Siebert, Charlie Schwab, Quick and Riley, and the bunch. It was really a revolutionary period for the brokerage industry, but it wasn't as revolutionary for the average trader. Well, why? Right? Because these brokerages provided access to educate to discount pricing model, but very little on in terms of education. So that left traders really inexperienced, not having any strategy, education about how to trade, what strategies to employ, the discipline of trading that's required, and so forth. And so to me, kind of fast forwarding to today's world of the prop, trader world, there's a lot of similarities. And again, once again, these prop firms, what do? They provide the platform at a very attractive pricing. So to give you an opportunity to prove yourself in order to elevate to potential payouts, right? So you're all familiar with that. But again, kind of the same, situation, right? We've all been, you all know how it goes, right? Buy an evaluation, bust the account, reset, bust again, reset again. All right. So it's just kind of a merry-go-round there. And so what we thought we would do is, we, amongst ourselves here at the Mr. Top Step, and in the development of Pitbull Trader funding, we said, we need to have a different approach. And so we've developed this new approach to our prop trading. It's all about trader development. Simply, you follow the rules, build your skills, right? And of course, get funded. So with that, let me kind of move along here, give you a little bit of background. Of course, before we do that, we need to start off with, of course, the standard industry disclaimers here, and that you're all familiar with. So I'm not going to go read through that, but you know what they are. A little bit about my background personally. Of course, I've been around the business for quite some time. I feel like a dinosaur at this point, um, but I'm still, very excited. I love coming in every day trading. The challenge of the markets obviously have evolved over the years, but the challenge is still there. Now, in terms of our trader development, and this is going to be across the spectrum of the speakers that you'll hear after me, and an ongoing daily and weekly program that we've developed on our own Pitbull Trader community, where you'll have access to the community platform on our online service, and you'll be able to benefit from throughout the week from each speaker will have the way it's laid out. Each speaker will speak in the mornings, and then some guest speakers in the afternoon in terms of helping you guide through the marketplace, through this maze, the volatility that's occurring now, and so forth. Right. So one of our kind of the four pillars of our trading developments is obviously to improve your decision making skills. Again, many of you again don't have really plans, strategies, and we're going to help you develop that. All right. I've been I've been in the trading education side of the business for now 15 years, and I've helped many a trader over those years develop really key competency skills in order to help them develop themselves to the point where they go on. My own personal experience, again, I wouldn't be here 44 years later if I didn't have mentors and traders that were interested in my development. And this is kind of our initiative here. Danny and the group and the team, we all have the same common goal, is to help the next person. Okay. And again, we're not here to hand out trades. We're here to show you a process that you'll be able to utilize on a daily basis in moving forward. So another part of our mission here is to help you learn some new empowering trading habits. Many of you have really, you know, deficient habits, and you know what they are. We're going to help you try to change those. All right. Demystify market action. Again, this is an ongoing process. What the current state of the market is geopolitically, all the volatility and all the various components that make up, what we do on a daily basis. We try to kind of sift through that maze and try to keep, focused on the best, intraday opportunities available. And then frankly, and then lastly, just not, last but not least, but, we want to become a more informed trader. All right. And so in doing so, it again just kind of rounds out this mission going forward of what we're working on doing. Okay. In particular, Polaris Trading Group. Again, I have a particular slot during the week, and I'll have also some various spots throughout the week that I present what we do in our PTG community trading room, which will be shared collectively across the Pitbull Trader Funding trading room as well. But some of the things that you'll learn, again, one of the questions, in particular, my wife this morning said to me, asked me, well, what am I going to learn from you? And so I gave her a number of items, but here's just a short list of things that we do on our program here. Right. So we have a various strategies. You may not have a strategy. You may have some setups. You may have some indicators, but do you know really how to implement them in an overall core strategy? Okay. So we have a number of different strategies, specific to Polaris Trading Group that you will learn. You'll have access to. You'll see actually real-time trades on screen in our trading room. And in terms of that, let me just round out what you'll actually see from the PTG, Polaris Trading Group trading room segment. So these were actually trades. Again, I did want to share some charts so you have some sort of an idea of what you'll see in the pit room, each week. From my perspective, anyways, is you'll see some. We have a couple different strategies, a number of different strategies, but the ones showing here is on the left-hand side. This is our opening range strategy, which we as the name implies, every RTH opening in all various instruments, but we're selected here crude oil, and this is actually the past couple days, all right, that is unfolding at this stage yesterday. And then finally on the right hand side, just another kind of various signals that our system generates throughout the course of the day, and we select particular trades. And then in this case, you see all these trades will be displayed in real time. They'll be talked about in advance, what we're anticipating the next trade to be, and then when that signal, when the computer here generates the signal for us, we will go ahead and initiate that trade. So I just wanted to give just kind of a brief overview of what the trader development program that we've put together. Again, all the folks on the team here are fully committed to help you become a better trader. All right, we've been in the business a long time. We've been successful. Again, as I mentioned, I'm here because of mentors that I've had early in my career, and we're going to continue that program here with the Pitbull Traders. So that is all I have to say. I hope to see many of you, in the pit room over the coming days and weeks. Thanks very much for your attention, and we'll pass the baton back over to Danny and for the next presenter. Thanks so much, guys.
Okay, thanks, David. What we tried to do, what we don't want to do is we don't want the webinar to go on for more than an hour. People lose interest. And I don't want to say bullet points, but we're going to knock it out. Better not to. When we know that whenever it goes on over an hour, people just kind of drift off. But I'm going to tell you that I don't think it's a good idea that you go out, you leave here early. I also want to remind everybody, please subscribe to the YouTube channel. And next up is a baseball fan and baseball coach and partners with Pitbull Traders, Manny. And Manny, we were talking to Neil yesterday a little bit about kind of how baseball and trading and preparation. And we know, even Neil said you're one of the most prepared people that go in every morning. You're live every day in the pit room. I'll let you take it from there. And thanks for coming in too.
Yeah, sure. No, thanks, Danny. Thanks for the introduction. So Danny said, a lot of you guys know me, have heard me on the stream or seen me in the room. For those that don't, my name's Manny. I was born and raised in New York City, and I now live in Tampa. I first started my trading career. I worked for Bloomberg for about 10 years, and that was my first exposure to markets. I didn't know it at the time, but I started off in analytics, and that kind of taught me how to analyze markets. And then I moved to the trade desk, which eventually was going to teach me how to execute, right? And so where the rubber meets the road really is about 2 years or 3 years ago, I was talking to some of the guys in the chat, and I started hearing about these prop firms, right? And my first instinct was skepticism. So I would think, wow, why would I give up 20% of my profit? Why would I stick a middleman between me and my goal? But over time, that thinking started to change, right? I took my first challenge and I failed it, right? And that got me a little angry because I thought, I wanted to join the Traders Cup, and I can't pass this, this $50,000 challenge. Come on. So I got back into it. Eventually I passed. And the funny story is that like the funded account just sat there dormant for a few weeks because I was trading my personal account and it didn't matter much. But over time I started to trade it, and I got to pay out, and I saw how the system worked. Within that process, within that time frame though, what happened was kind of like my thinking started to shift, and I started to see prop firms not as a 20% tax, for lack of a better term, but more as a risk mitigator, right? So I could use that account for different types of setups even, or different types of trades, while I can swing my personal account. And so fast forward, over the last 2 years, I've pulled in over $300,000 in prop firm payouts. I've been featured. I've traded live accounts with all the top firms. So TopStep, Take Profit, all of them. I've also been featured on YouTube channels, Power Players, and so on and so forth. So I've really learned how the system works, and I've been able to. What I want to explain to everyone is how it can benefit you in trading. So most traders approach the day without a game plan. And they come to the market, they want to trade, they want to make them, they want to, they want to feel smart enough to go in there and beat the futures market for some points. But most traders that I see, or a lot of them, many of them, show up ill-prepared. And the difference between coming in prepared versus not prepared is one is reactive and one is responsive, right? So reaction kind of has an emotional component. And so if you're coming in unprepared and you're reacting to what you're seeing on your chart, on your screen, it already has there's already the kernel of emotionality behind that, right? Because a lot of what we do, a lot of our reactions are based in emotions, right? Whether it's FOMO or the euphoria of wanting to put on a good trade, all of that carries the emotional component to it. So what I try to do is, well, at least in my own personal trading, is I try to remove that, right? So in the way that I do that is I come in prepared. So a quick story about how it all came together. So initially, when I started trading, right, I lost a ton of money, and there weren't prop firms were just getting started, get started a few years later. But so I'd come in unprepared, and I found a mentor once, and she was a great trader. She had a super methodical approach, and she was the one that told me, "Hey, I'll mentor you." Like, this is the first person who would pick up the phone and actually talk to me about it, right? And she said, "I'll mentor you if you come in prepared. So I want to see 2 weeks of you coming in with a trade plan every day, and we'll work on it." So the first time I showed up with a super elaborate plan, and it was way too long. Ultimately, she said, "You need to go back and simplify this. This is way too complicated." Over time, I started simplifying the plan, and over blood, sweat, and tears, what I learned was it wasn't so much about the plan, but it was about the preparation, the steps that went into having a big plan, and then shrinking it down to something that's more executable, right? And that's where I feel that's where I kind of cut my teeth. So each day I come into the pit, and guys that are in there now, and more importantly, before even the pit launch, for years I've come in, and each morning I kind of have this process. So you're going to get the same thing from me, and you're going to get good morning and a trade plan, right? And you can see that one up on your screen. That was Fridays. It's in the preparation and the methodical process that we can find success. And so when I come in, when in the pit, what you guys are going to get from that, and what I hope to teach you is, or to share with you, is how we can remove some of the components that kind of hold traders back. So if you come in every day with a plan and you come in prepared, you're already ahead of the game because you're removing that emotional component from it, right? And so every day when we go in, when I come in, I try to set that out for traders so that they know what they're doing. So let's see. Bear with me here. Let me just get my notes. So what you can expect from me is that approach. So a lot of what the trade plan is just pretty much words. But what we go through daily, what I share with traders in the room, right, on live streams and in real time, is how to engage the level. Right. So there are two different ways we're going to trade this, right? There are what we call first touch fades, and then there are engagement tactics, right? Everyone has levels, right? So why isn't everyone making money? Well, a lot of what's lost in that is how to engage at a level, right? And that's kind of what I coach and what I teach. So every level is not the same, and you can see that kind of drawn out in my trade plan. I often get the question of, "Hey, Manny, why is a continuation long not a first touch fade?" And the reason is the thinking behind the plan goes into knowing what levels are going to force action. And I tell them all the time, so we don't want to fade that level. Let the guys who are going to fade it, and then we're going to get on, and we're going to get on when they're being liquidated. So finding those liquidity zones, finding where the forced action will take place is kind of what I teach. And so, like I said, I try to emphasize all the time, it's not really about having the right level, because we all know you can have the right level and still not succeed. So in those engagement taxes at different levels and how we approach that is the nuance of trading. And that's kind of what I hope to bring to the table and show guys. And I try to, and I do that every day in the pit. One of the, let's see. Yeah, so with that, I think that's basically covers what I have to offer today. Check if you like, come check us out in the pit, and I'll turn it back over to Danny.
Good job, Manny. Okay, great job. And again, you know, we're trying to bullet point this, and the idea is, you know, Marlon will put up the link to the pit room, and I want to explain what the pit room was. What I wanted to do today was do a video of the new chat room. It's developed over the years, but in the past it only had text and charts up. But now the new pit room has multiple channels where Manny can be on, David can be on, Rich can be on. We can have 5 presenters with charts up going live. And the idea with this is to bring all of our educators in from on the open, you know, 9 o'clock in the morning to 10:30 every day during the week. Someone will come in. We've got a schedule, and then we're going to do a noon balloon update, and then we're going to try to start doing something later in the day with the mem. But anyways, I'm going to bring on the oil man. His name is Neil, and I want to talk a little bit about Neil, because one of the things that I've gotten an opportunity to do over the years is be able to kind of feel out and examine people with what they post and how they create flow and how they talk. And he keeps saying I get his handle wrong, which I believe is Reverie, but Reverie, you know, he was joking about it yesterday. But anyways, what I think is really, really important about what's going on right now in trading, you know, we all look at the index markets, we look at the S&P, we look at the NASDAQ, but really one of the focal points, and it's always been a focal point, is crude oil. And Neil is from Canada. He's got a great perspective. That's all he trades. And back a couple months ago, we've been chatting back and forth by email and phone calls, and always felt that he was one of these kind of special guys. And I talked to him about coming in earlier this week, or last week, and trying to do something with crude oil. Now, I want to point out that a lot of these presenters have products, you know, and they have individual rooms within the pit room. In other words, they can present, but if you want to talk to them directly, you can tap on a tab and you can say, "Hey, Neil, I like what you're doing. Can we hook up? Can we talk?" Or if you like David's product, you can hit up David. And like I said, it's not just about being in the pit room. It's about expanding what we're doing as far as the educational side.
Hey, Danny.
Yeah,
Danny,
Neil.
I don't want to interrupt you, but people want to see who the 3 winners were from the.
Oh yeah, no problem.
Yeah.
And I want to announce the 3 winners, and I'm very happy to hear this. John Morocco from our chat, he won one of these challenges. Raj Puri, sorry about that, Marlon, and Keith Gibbs. They're the 3 first winners of the $50,000 accounts worth that were given out. And I'm glad to see that John won one. He's a great guy. He's in the room every day. So anyways, we're going to hand it over to Neil. And again, Neil doesn't have a product. He's just a trader, but you're a damn good one. And I'm happy that you're here.
Thank you very much, Danny. That's a very generous introduction. You know, I am pretty much exactly as Danny said. I mean, I trade crude almost exclusively now. And my handle, my nickname is Rev on the chat, but of course my name is Neil, as Danny mentioned. So I'll start off with my own story. You know, in high school, October 19th, 1987, we all know that day. And a lot of us, you know, a lot of the guys on here were well into their careers when that happened. I was just a kid in high school. And one of my teachers had the foresight, probably because her pension fund was getting creamed, to teach everybody about the stock market. And she told everybody to go, excuse me, and pick 10 stocks that you thought would be good companies and track them for 30 days. And then she also said to take 10 companies just randomly and track their performance. And almost everybody that did this project, their random stocks outperformed the ones that they chose. And immediately I was hooked. And my very first job was actually for a gas trading firm. I spent most of my life in Alberta, which is sort of the Texas of Canada, if you will. And the energy of the trading floor and the, you know, it was every day. It was like that last scene in Trading Places with Eddie Murphy and Dan Aykroyd. And that was very exciting, I thought. So once I saved up a few bucks, I opened an account and won and started making money. And I thought, you know, here's the path to the promised land. And then very quickly realized once markets changed, you know, the old saying, don't mistake brains for a bull market. That was me. And I promptly gave that all back. And so then I realized that I started looking for answers. You know, why did this happen? How could I have avoided this? And it wasn't very long before I found a bunch of people that said things like, oh, it was because of this. Or if you had just subscribed to my product, this wouldn't have happened to you. Or all the things that, you know, that led you to believe that you don't know enough. So I went down the rabbit hole of learning everything I could about energy markets because that was the world that I lived in. I joked with Danny yesterday that oil's in my blood, although my doctor says the medical term for that's cholesterol. But anyhow, I went down the rabbit hole like a lot of people do of learning everything I could about the markets and energy markets and fundamentals and financials and technicals, and started incorporating those into trade plans that ended up being so complicated I could hardly tell if I was net long or short. And then realized that, you know, there has to be a different way. And, you know, I was very lucky to have a very good mentor. His name was Kim. He gave me the right material, you know, to actually learn this stuff. And that became invaluable. Little did I know he changed the course of my life, and for the better. Through that, you know, like, you know, through all that educating myself, I, of course, came across the Market Wizard series. Marty's story really resonated with me just for a whole bunch of reasons that are too numerous to get into here. Through that, met up with Danny and got to know Danny a little bit, and he invited me to join his community. That was really what I was looking for, was community. I mean, you have to trade on your own, but you also need to be a part of a community so you don't lose your mind in the isolation. And so the way I approach Crude is a combination of mostly technicals, knowing where the limitations of technicals are, fundamentals, and understanding the financial backdrop. And I talk about this stuff every day in the trading room. As Danny said, I speak a lot with a lot of the traders in the trading room, and I really enjoy it. I find that, you know, the old saying that if you want to really get good at something, teach it to a novice. And it's amazing how much I've learned myself about my own trading approach by having to condense it into something concise that can be absorbed by somebody either new to it or somebody trying to unlearn bad habits and learn new good ones. Excuse me. So why Crude? I mean, I already talked a little bit about that, is that was just the world that I was in. And, you know, and if you live in Alberta, it's pretty tough to miss the oil patch. But, you know, if you go right to its fundamentals, energy really is life itself, right? Everything is energy. And how that manifests itself in the markets is that, you know, if something moves from point A to point B, it required energy. If a good needs to be created, it requires energy. And so it's interwoven into absolutely everything. And it's pretty tough to separate, you know, market health, economic health, physical health with a lack of energy or lack of understanding how it works. So it really does have a certain infinite significance, especially right now with what's going on in the world. So, so how do you actually, with how exciting it is, how do you actually involve yourself in it? How do you capitalize on it? How do you approach it? Well, not everybody has a NYMEX account. Not everybody understands futures markets. Not everybody understands all these different things, but there are a lot of ways that you can do it. So like I said, you can trade futures if you want. You can use things like USO, which is the big ETF that is the paper that equates and approximates the equivalent of what crude is actually doing in the world. There's things like XLE that is a basket of the oil majors. And if you're a dividend guy and you like to just buy and hold companies, you can trade things like XOM, CVX, ExxonMobil, Chevron. So there's so many styles and approaches, and which is really something that there's really something for everybody in trading energy products, specifically crude, just because that's the one near and dear to my heart. But there's a great community of people that I was saying to the guys yesterday while we were talking that it's a little bit of a hologram. Everybody can look at energy markets and they think they're looking at the same thing, but because they're looking at it from a different angle, they all have a very different picture that appears to them. And through that, it can sow confusion, but it can also give you clarity. It can also give you clarity based on your own experience, which is really at the end of the day, what you need to be trading. So what I want to get to though is, and I think why Danny and I talked about this and thought, yeah, this might be useful, especially right now, is all anybody cares about is how big of a deal is this and where is this going? And I'm referring specifically to crude right now. And Danny, feel free to chime in with me on this part if you like. But the thing is that in the past, what has happened is geopolitical risk or tension has been something that appeared on the news and everybody got all scared and everybody gets long crude and you end up with this big giant spike. And then of course the futures open Sunday night and then Monday morning and they fall like a brick. It happened in the Gulf War. It happened last June or July with the Israel flare up. And of course, everybody bought that and got creamed. And so they thought, well, let's do that again this time. Let's sell it. And in the last week, it has done nothing but continue to go up after that initial sell-off, and all of the shorts got, or all the longs and short, when all the shorts got blown out. Sorry, I've got too many things I'm looking at my screen here, and so so when everybody tries to do the opposite of what they did last time, the market has a funny way of making you pay for that laziness. And I think there's a big part of that what's happening this time. One of the interesting things that's different though, and this is where the fundamentals matter, is that we are talking 8 to 15 million barrels a day that are being disrupted. That is happening. It's not a risk. It's not a tension. It's happening. And the question is how far does it go? And nobody really knows that. And one of the things about our community that's really useful is that you can really, it really helps you delineate, just through conversation, what's real and what's not. How are people feeling? Is the boat too loaded on one side? Is the boat, what are people not paying attention to? And so, that's one of the things I see a lot of the financial guys saying, well, I'm going to keep trying to sell this. I'm going to keep trying to sell this. I'm going to keep trying to sell this. But, this isn't that's what you do when it's a threat. When there's a real physical shortage coming, you have to start looking at the contagion risk. And that's the part that I've been paying attention to, which hasn't abated yet, especially last night with even more drama coming up. Danny, is there somewhere you want me to go with this from here?
Well,
you've got some.
no, I mean, I love what you're saying. And the only thing I can think of is the markets hate uncertainty. Right?
Yeah.
It doesn't matter if it's crude oil, the stock market, the bond market. And there's a lot of uncertainty out there right now, and the old saying, politics and trading don't mix. But in this kind of case, we're involved in a lot of politics, geopolitics and geopolitical politics. And my own opinion is, and I said this early on, probably about a year ago, when Trump took office, that I believed, and again, I'm not expressing my political view, that there would be increased volatility as long as he's in an office. And so far, I believe that that's really right on. How this all pans out, Neil, I mean, I don't know how it's going to end up.
Well, here's the key thing to keep an eye on right now is that, right now, the Strait of Hormuz, you can't listen to the internet or the radio or the anything without hearing about that. And that is a really important choke point. What my current thing that I'm worried about right now is the other side, the Red Sea, the Bab al-Mandeb Strait.
Yep.
That's the next choke point where if you start cutting things off to the Suez Canal, I mean, it really is going to have to, I worry that it is going to devolve into a fight that is, it's just going to go until somebody cries uncle.
Yeah.
So let's keep an eye on that. And David and I were talking about this yesterday about how does this thread into the S&Ps? How does this thread into the economy? How does this thread into everything? It's pretty tough to avoid. And the key thing here though is, especially as this relates to trading, because I mean, as you can already tell, I mean, you can go on about energy markets forever and barely scratch the surface, but there is, you should be falling on bearish news and you should be rising on bullish news. And what we're doing is we're just, getting bullish price action to every bearish tweet, every bearish attempt to quell this every single time. And because, for example, the SPR releases that they announced this week, I mean, that worked for Biden in 2022, but that was a threat with the Russia-Ukraine situation of maybe 3.5 million barrels a day.
Right.
And the 1 million barrels a day of SPR release did help. This time we're looking at 8 to 15 million. And that, you can't solve a problem of that magnitude with temporary solutions. And then just like we saw with COVID and supply chains, the knock-on effect, you don't just start this stuff up again. When you shut down an oil field, which is what people are doing, you don't just turn it on again, like Apollo Creed said, like some radio. You don't, you do permanent damage to fields when you shut them in many cases. We talk a lot about this in the trading room, and and the question is, how do you trade it? What tools do you use? What vehicles do you use? What approaches do you use? How do you manage your money? How do you size it? Do you use options? We have nowhere near enough time to get into that today, but that's something that I've really enjoyed talking to some of the other guys with. Even though, of course, when it doesn't work out, you hear it on the other side too. But, luckily more often than not, it does work. And if you understand what the underlying forces are, not the underlying presumptions, and that goes right back to the preparation that Manny and David talked about. And I think that's probably the thread that bonds all of us, is that we're all very prepared. We take a professional approach to it, not just a winging it, panic, follow the algos, follow the Twitter, shoot from the hip approach.
Well, you were right on. I mean, I want to talk about this real quick. I think it was Wednesday, wasn't it, when the G7 made the announcement about releasing the 400 million barrels?
Yeah, I think you're right, Danny. Anyway, yeah.
Neil came into the chat. He was posting, and the markets were moving. Both the S&P and Crude were moving up and down. And he told everybody, he posted it in the chat, said, hey, guys, beware of these headlines. They could come out at any time, right? You did.
Yeah.
And then sure enough, the headline comes across that, they're going to make this, 400 million barrel release. And it's not all at once, right? I mean, but anyways, then on top of that, and this was before any of that hit the tape, you said after the headline goes out, sell that pop. And it was absolutely spot on. The timing was perfect. I haven't seen anything like that in a long time. But anyways, listen, we're running into our 15-minute time. I want to thank you very much.
Yeah, thank you, Danny.
The thing is that I always look for people that, know what they're talking about. And obviously, we've gotten to know each other better, and having you in the chat and putting out your opinions and your ideas has just been great. I really appreciate it.
Yeah, thank you, Danny. And I've enjoyed our friendship as well, and certainly with over the years with the guys in the group. And if anybody wants to talk more, I'm always happy to have a good crude conversation, in the chat group. So feel free to hit me up anytime you like.
Thanks a lot. Have a good weekend too. Okay, so before I go back online and I introduce the one, the only Rich from Handle Stats, I want to announce the next two winners. And if I pronounce your name wrong, I guess that's just me. Irene Blog, B-L-O-G-H. Blah, I don't know. Irene, you won one, I think, B-A-L-O-G-H. And Dennis Solanco. They're both on Twitter, and Marlon's going to be, if what we're going to do is we're going to give you guys Marlon's email. And now that you won, you're going to email him, and he will set you up with the account so that you can start trading them. But I want to point out something. What you're seeing now is only a small part of what we've got going on. We probably have 6 other really, really good people that come on from, Jimmy Mayo. We've got a couple of new women traders that we're really excited about bringing in. Lauren and Danny. Danny's dad ran a big trading operation in Chicago, one of the nicest people I know. And there weren't a lot of nice people down there. And Niels from Delta Trader. If I miss anybody, I'm sorry. I'm just kind of focused on trying to bring in Rich. But we've got probably a total of 10 presenters. And there's Rich. Hey, Rich.
Morning, Danny.
If I could, real quick, let me talk about you a little bit, and then you can give your background and who you are and what you do. I can only say that when I was in the S&P pit, that I didn't really know everybody. I probably recognized a lot of guys, but I did remember Rich. And I can't remember who introduced us, Rich, but I immediately was drawn to Rich. One, he was a floor trader. 2, I'm a big stats guy. I like the quant side of things. I like following everything. I mean, originally in the beginning of my career, when I was doing the Pitbull's business from the desk, he used to quote out stuff from the Stock Traders Almanac to me all the time. And around that time, I started buying the Stock Trader Almanac, and I still keep in touch with Jeff Hirsch. He's a great guy, but and very close friend. But Rich and I have also become very close friends. And of all the people that have been in the forum, been attached to MrTopStep and Pitbull Trader, I believe that Rich works harder than anybody. But anyways, Rich, if you could tell people a little bit about your career, where you moved from, what pits, where you went to at the CME, how you got out to where you're at, that'd be great. And then into your studies. Thanks a lot.
Thank you, Danny. I hope I can live up to that introduction. I started working on the floor, didn't have enough money to start trading, and worked my way up to finally leasing a seat, and I started trading in the cattle options pit. So I started with options way back in 1989. I was trading options there. I traded one other time before at the Mid-Am exchange, before that. But then I moved from there into the S&P options and the S&P pit. And then I went to work for Globex for a short period of time, actually doing some marketing in electronic trading. And then I went back to the NASDAQ pit. And then I started trading the E-mini on the floor. And in 2005, I moved out here to Colorado. And about 6 years ago, because things weren't working as well, I decided I needed to learn to do some quantitative analysis. And I talked to a friend of mine who had done some programming for the options group that I had been in at one time, and I remained friends with. And he said, "Rich, you can't hire that done. You got to learn to do it yourself." So over the past 6 years, I think I've spent probably about 18,000 hours learning to program and programming. And I do a lot of stuff, mainly in Excel and VBA, but now I'm starting to do Python. And I work really hard. I've got a lot of different models that I've been working on, and I'm constantly updating and doing things. And my models are getting so big, I'm really kind of having to move it into Python because the models are just too big for Excel to handle at this point in time, and do things quickly enough for some of the things that I'm doing. But anyway, that being said, I mainly have been focusing on the S&P and NASDAQ, but I also follow a lot of other markets, the bonds and the notes, and I have some crude oil stuff. I follow a lot of ETFs. I follow the metals markets, and I mainly look at standard deviation levels. And standard deviation levels, if I can move this here, the market moves within probability distributions, and there's so many options traded today. I use the options pricing model and implied volatilities to get my standard deviation levels, because they're dynamic in that no matter what happens, as long as we have a feel for the implied volatilities, we can enter them into the model and get support and resistance areas. And those are areas where institutional desks monitor those areas because they have to. They've got to make adjustments to their portfolios of options, and you'll consequently you'll see reactions of markets at those levels. So and there are 1, 2, and 3 standard deviations on the standard distribution, and we know what those are. That 68.5% of the time the market stays within 1 standard deviation up or down, 95.5 is 2, and 99.7 is 3 standard deviations that the market remains within. And I put those levels out every day, and I actually put them on my charts. Here's plus 1, 2, or 3 standard deviations. Let me close this, and we'll jump into this is. I brought a bunch of charts up that I wanted to look at. Let's go here and open this up. These are the levels for Monday. Actually, if anybody wants to take a screenshot of that, you're more than welcome to. These are the 1, 2, and 3 standard deviation levels that I'll be using Monday based on the Friday settlement and the current implied volatilities. So and the market really respects these. As I say, they're dynamic. When volatility goes up, the levels increase. When volatility goes down, they narrow a little bit. And I put them out in, if I can open this right here. I do a lot of things. One of the other things I do is I not only look at 1 day, 1 standard deviations at the beginning of every week. I do a 5-day standard deviation level. So this is what I expect the S&P and here's the SPX, ES, NASDAQ, Russell, and the Dow, and the related cash indices, and these are all the SD levels for the entire week. So I'll look at these levels and see that the market, stays between them for the entire week, and obviously the accompanying probabilities. And I have some other probabilities on these stats here. I know I'm going a little fast, but I have a lot of stuff that I do. And one of the main things that I do is I like to take a longer, I look at things on like a quarterly basis, and then a monthly basis, and a weekly basis, down to a daily time frame. And I have a whole theory on market pricing and time frames. And I, go through there, and based on I do conditional formatting and a lot of statistical analysis on these different time frames, and I come up with ideas about what the probability is for the market to be up or down. And and these statistics I have all the daily data going all the way back to 1970. So there's like a lot of days, 13,000 days of data in here. I boiled it down to quarterly data. And since 1970, we know that 80% of the time the years have been up. When the first quarter's up, that the year's been up 88% of the time. When the first quarter's down, the year's only been up 52% of the time. So going into this quarter right here, I'll jump here real quickly. Here we are going into the first quarter, and we so far we've still remained above the fourth quarter of last year's low, and we took out that high. But if we close lower this quarter than the 2025 close, that's going to put us in a situation where we may or may not end up higher for the year. And so I look at things like that, and in my studies I map out scenarios about what I think may happen, or and then get probabilities based on that. And I will change my trading. I do a lot of swing trading. I like to do like longer term positions, and I will monitor my positions based on where I believe the market's headed. And and obviously that's updated with each new additional month. And in this case, I'm looking at the quarter, because this is going to be a big thing if this quarter ends up down, for me, to figure out what's going on. Going into this quarter, the first 2 months we were up on the year still, and when the first 3 months of the year are up, when all of them are positive, even though we lost a little ground in February, we're still up on the year. We've never had a down year, so this is going to be. We're going to know over the next couple of weeks if we don't climb back up here and make a higher high and close a little higher. It could be a 50-50 proposition as to whether the year is going to end up positive or not. So I'm going to be following that very closely. What else there's so many things that I do and I can add to. The other thing I do on a daily basis, and I'll just show this real quickly, and that is I have what I call the VDB, and I put out these graphs every day. Let me get this down here. Open this. Open. Here we go. Come on. I put out these VDB graphs every day, and what they are is it's a max pain point. And I've modified this model, and it only works in the SPX. And it gives me an indication of where the price is going to settle. Yesterday, I thought the price was going to settle at 66.70. Of course, the war news kind of took it down a little bit, and it ended up lower. But the day before, on the 12th, I said 65, and it was kind of right in there. And on the 11th, it hit it right like to the point. Let's see, here's the 11th. 67.75, and it ended up right there. And I've learned to interpret these graphs, and they give information. And so we every day I put these out in my room, and it gives everybody an idea about where the market's going to settle that day, and they work really well. There's times like Monday where it picked this 66.95, and of course it was like 100 points higher. But there's things in here that you can read and interpret, like these squeeze points, that if it can get past there, it can rally quite a bit. And same way on the downside. I mean, there's floors and ceilings and squeeze points, and you learn to interpret these. I've been doing them now for I've got about 4 years of this kind of data, and it's really a big deal to be able to look at a chart and see at the end of the day, towards the end of the day, where the market may be headed. And it's fabulous for making some trade projections, and we'll get those 10, 15, 20 point moves at the end of the day, and you can take advantage of them when you have a better idea about where that's going in. So it's these. I have opening gap tools. I do a lot of things, and I'm always working to improve them, and I like showing people what I'm doing, and these standard deviation levels is something that everybody needs to learn to understand, and I'm go into detail, and I'll show anybody how you can what the modeling is to make them, but they are definitely something that people need to be familiar with, because the market reacts at these points all the time. That's about all I have, Danny, right now.
Well, hey, Rich, before you go, you forgot one part of your career. You worked for Globex.
I worked for Globex.
And you worked for Charlie Barwitz.
Charlie Barwitz, yes, I did.
And that had to be an experience in itself.
It was a real experience, and Charlie was doing all in charge of like marketing Globex and working and developing it early on for the CME, and it was when they first wanted to get floor traders more involved in using electronic trading. And since I had already been using it a little bit because I was an options trader, I was using the overnight futures markets to hedge or scalp gamma. And so I was kind of familiar with it. And plus I knew a lot of people on the floor. I had worked down there and had worked in many of the different pits. So I knew a lot of people. And he came to me and said, I want you to, try to get some of the floor traders to start using this,
which they didn't want to do.
They didn't want to do, but the CME because at the time it was a system that when I first went to work for him, it was a system that Reuters had as a news agency, and Reuters did currency trading on their platform. And so the CME came in, put their futures products on the same platform with some modifications, and there was a host matching engine, and they actually had looped landlines to everybody's, like your office or your house. I had a Globex terminal in my house, and it was a really slow system. It was before the internet. I
thought that the CME actually got Globex from the Matif.
No,
oh.
The CME it was a Reuters system, and they had a partnership in some form with the Matif at one point in time. I don't really recall exactly what it was, but I know they had a partnership with Matif.
Yeah.
But that Reuters, the original Reuters platform, and I think one of the reasons that Reuters got into it was as a news agency, they had cable all over the world, like news. And so it naturally morphed into a currency trading platform because, people could interact and currency trade around the world on this news agency platform.
Right.
And then the CME wanted to expand their use, and they went to him and made the deal and started trading their Globex on that platform. And as I say, it was you had to be directly wired to the host matching engine. There was no internet. There was no internet. Well, there was an internet, but it wasn't open people weren't using it at the time. This was back in the early 90s. They started that system in 1992 with Reuters, and then I worked for them in 1995 till like September of 95, from like January till September. And it just so happened that I worked for them for 9 months, and then the market started taking off in the big bull run, and I was just going absolutely insane, saying, I got to be back trading. I can't do this. So I got back into the pit and went into the NASDAQ pit, and it was the early stages of the
meltdown,
the .com bubble.
Yeah.
The NASDAQ pit, that was the Wild West. And then and I was only there for a couple of years, and then Charlie came down and said, hey, we're going to start this new product, the E-mini S&P. It's a mini contract. It was a tenth the size of the S&P. At that time, the S&P was $500 a dollar, and they said, we're going to start this mini product, and we're going to trade it simultaneously on the floor and let people access it to their trading firms, by the internet. And Barry Lind was the initial guy who came up with it, because Lind Waldock was a big discount futures broker, and he wanted to get his customers. They wanted access to trade something electronically, and so he pushed for it. And because before that, no futures product traded during the daytime; they all traded only at night. So the E-mini was the first product to trade side by side with the pit during the day, and it was 1/10 the size of a big contract. So it brought in a lot of small retail traders, and we were doing arbitraging between all the small retail traders and the pit, because we were on the floor. So I went, and Charlie came and asked me if I would support the product, and I said, yeah, I will. I'll give you 30 days of my time. I didn't know if it was going to work, because when you're a floor trader, you had a spot in the pit, and I had a spot in the NASDAQ pit, a real good spot. If you had a spot and you came in and somebody was standing in your spot, they had to move.
Yeah.
Remember
Listen, we're going to tie it up because we've gone over our hour. I want to thank you, Rich.
Okay.
I know that when we talked earlier this morning, I told you that it was like we were 2 hours, and then I called you up and said, well, we're going now,
Yeah.
Thanks for coming in. And as always, I appreciate everything you do.
Okay. I now look forward to seeing people if they come into the pit room. I'll be there a couple times a week or more whenever you ask me in, and I'll show them what I do in the morning, and be happy to share.
Okay. Well, thanks a lot. You have a good weekend.
Okay. Thank you, Danny.
You got it. Okay. So we're going to finalize this by saying that John Galish, John Stellers, Michael Moore, Gordon Gibson, and I believe I know some of these people, Barbara Lopez, will be getting a free account, $50,000 account. So I'm going to close out this. I want to explain something. I really don't prepare for this. There's no set thing that I look at to say, hey, this is what I'm going to talk about. I've been doing this for a long time. You guys, a lot of you know me, and there have been a lot of ups and downs in my life in trading. And I think that trading and life's and ups and downs, they go together, right? I mean, not everything works all the time. Sometimes it does, but just like trading, there's going to be good trades and there's going to be bad trades. But at the end of the day, I really do believe what we've started in 2009 with MrTopStep was to try to bring people together, not to trade in a closet. And like Rich has said, if you join the pit room, and I want you also to join the YouTube channel, please click on the YouTube channel and join. But guys like Rich, guys like Manny, guys like David, everybody. They come in all day long, and people are chatting back and forth. People are showing charts. We've got a news service in there called Live Squawk. I don't very rarely, if ever, will you see me on my TV. I mean, after COVID, I just kind of finitioed that. And we've got Live Squawk, we've got the Mem, we've got Spygate. That's something I go on and I show you that shows the buy and sell programs going on. But at the end of the day, I really want to say it's just the effort of all these hardworking people. And behind the curtain right now is Marlon. He's been my partner for, I don't know. I mean, I can't even remember how long, but he's done a great job today managing the video work behind the scene, keeping up with who won the contest, putting up links. It's not an easy job, but he also created the new chat software, which I believe is really, really something special. Where, like I said, somebody goes in at 9 o'clock to 10:30. Come back for the noon balloon. Come back. We're going to try to start working the last hour, and just create what I call trading flow. And as I'm going to finalize this, I really believe in my heart of hearts, when I started this, it was not about me. It was really about the essence of trading and sharing. So I want to thank everybody for coming in. It's a beautiful day here in Florida. I'm going to go out with my buddy, and we're going to hit the beach and then go have lunch. So take care, everybody, and have a great weekend. And we'll hope to see you in the pit room on Monday. Take care.